Today is the 7th of April. This is Brad Matheny, and I want to thank all of you for your comments and questions, and particularly at this very, unusual time in the market. We are living through something that I don't want to say is unprecedented, but given the current cycle phase, given what we're seeing, given the current global market criteria, I'd say we're, on a new path. Let's put it this way, we're on a new path. So, where we're at today with the cycle patterns, and before I move on to the cycle patterns, I want to urge all of you to understand that, this is a transitional phase in the market. As I've told you for many, many months, and I hate to say the I told you so, but I've been talking to you now. A lot of you have been following me since back in, June, July, August, September or so of last year. And some of you are new, some of you are older, but I think you have come to the conclusion that I'm generally fairly solid on my analysis, and I'm generally fairly good about determining what the markets are going to do going into the near future. And I see this as a wave B pullback of a wave 5. Talked about that earlier. Wave B pullback right over here. So let me try to draw it for you. Here's our wave 4 low. Moving into our wave 5A, moving into our wave 5B, moving into our wave 5C. Now, if I am correct and this continues to play out, we're going to see tremendous growth over the next 2, 3, 5 years. So understand, between now and 2028, 2029, you're talking about maybe 100% or 200% growth in the SPY. How can I state that? Let's just say that I've done a lot more research than many of you maybe have. And let's just say that I have a little bit more experience than a lot of you may have. We're living through a cycle structure that is really, we haven't seen for a long time. I mean, a long time. So we're looking at a very broad upward trend. In fact, look, I'll come over here. I'll create a new template. Let's just call this EPP LT base. And so now let's come back over here. Let's come back over to monthly. So here we have a number of, this is the SPY. We have a number of criteria, but what is critically important, as I mentioned to you, is to understand that this is a big move up into wave 4. Okay, and technically this is a move 4 into a wave 5 that's going to move into potentially an A, B, C, or a D, E type of pattern, moving parabolically. Okay, now ideally, if this is a big move, this could also be a wave A, a wave B, potentially a wave C, and potentially, again, a wave D, and a wave E, way up here potentially. So understand that we could move into something like this as an extension to the upside. So given where we're at, as I said, I believe that we're looking at a doubling and potentially tripling of the markets over the next, call them 3 to 5 years. Let's call it 4 to 6 years, out into 2031, 2032. And that's what I've been telling you for years. So 2031 to 2032. So ideally here, guys, I've been telling you this for months and months and months. What's going to happen, how this is going to play out, where I see it going. And granted, you can look at me or look at this and say, how in the hell do you believe this to be the case? Just understand that I believe that the way things are working out cyclically, generationally, structurally, this is the path of least resistance right now, at least until we get up over here to 2031 and 32, where we're going to have some sort of a major crisis event. Don't know what it's going to be yet, but that's the area I think we're going to be moving out of this cycle phase and potentially moving into more of a broader correctional cycle. And that could take quite a while. But again, that's going to be something that I believe is going to likely take place. And I believe it will likely take place out here near 2031 and 2032. Now, the core elements here that we want to watch for in terms of real crisis comes from this once I get there. This is some extra research that I do on the side. You guys know that my research is not based just strictly on these daily cycle patterns. I do a lot of extended research. I've mapped the markets out here, look, to 2100. That's long. I'm going to be gone. And I can map them out even further if I want. Like I told you, I can map the markets out 200 years into the future, tell you what's going to happen. And for those of you who aren't aware, the markets tend to move through generic cycles. These types of events here, let me show you. We go into edit mode. Wait. These types of events here and here tend to correlate with war. Okay? So they tend to correlate with wars. War starting, conflict starting. So this means that we basically have all the way out to somewhere around 2044 or so, 2044 or so, may start a war or may be close to a war. So it gives you an idea that until then, we're going to go through a number of cycle phases. So we're basically right where this vertical line is, okay? And we're moving into 2027, which up over here is a positive upward swing. So we're going to move into a positive upward swing. We're going to come down here, reach a low point around 2031, 32, 33, move up to a high point around 2036, 2037, move down here to a low point around 2039, 2040, and then we're going to move into a potential war event or global crisis event. So we are reaching the end of our low cycle point. We're moving into a very large expansion phase. Then we move into a pullback phase here around 2033, 2032. We move into an expansion phase around 2035, 36, 37. Move into a contraction phase around 2039, 40, and move into a war phase possibly around 2044, 2043, roughly. So now, given this, given the knowledge that we are potentially moving substantially higher, I can come back over here and I can tell you that this lines up with that cycle event moving up into the potential war cycle. Back up here. So understand that we're now talking about a market that may do something like this. I'm guessing at the price levels, but remember, war takes place, or call it war and uncertainty takes place right over here. This is the peak, 2031, 32 peak. This is the contraction bottom. This is the war volatility, or just call it war, unknown. And there we go. Now, prior to this, now I want you to understand, look at this as an excess phase peak pattern. So now understand that we come up here, we roll up into an excess phase peak, we rally back up out of it. We're going to go through a number of excess peaks here, roll up to here, set up another excess phase peak, roll up to here. End of big wave one. End of big wave one. So I'll draw it here. That's big wave one. Draw it blue. Contraction into big wave two, coming down, moving up into big wave three, coming over here, contraction into big wave three or four, sorry, and then a move into big wave five. Now, gee, Brad, what happens after 2047, 2050? Well, let's come back out and look here. And what happens after 2050? We move into a downward cycle up into 2059, a contraction after the war. So this is actually going to continue out through contraction. I have to redraw this in red. This will roll up to here, move out into contraction, out into 2059, and then begin to really rally. And there is our next phase. And that is how the markets are going to move into this consolidation phase before rallying up to the peak. So I'm giving you a bit of a sideline here, wasting some of my time I have, but I want you to be aware that, this is really what the markets are probably going to end up doing. And this is going to be our big excess phase peak, inverted excess phase peak pattern right here. Rolling up, coming back down, setting up the flagging right there in purple, flagging out like this in a downward channel, rally up above the support, up into consolidation, and then rally up to the ultimate high. So right there, guys, there's your inverted excess phase peak pattern setting up. Right now, and I will save this for you, or you can save this chart. Right now, we are in this broad pullback of the excess phase peak pattern here. We rolled up, rolled through this excess phase peak pattern, rolled down into consolidation. We're likely going to find that support level right down here between 520 and 480, 485. And then we're going to roll into potentially a breakdown low. Oops. Which may end up moving down into this 410, 420 area as a big breakdown. Or, as I'm showing you here, let me make this purple. Or, as I'm showing you, we will revert back out. Now, how do we revert back out? What does a reversion look like? It would mean that we would find some low over here, June, July, or October, and start to revert back to the upside. And again, that is going to be essentially my plan going forward for the next 3-4 months, is that we are going to be trapped in this sideways consolidation range. I've highlighted it right here. You can see we're pretty much going to get trapped right in this range. It's going to be a wide-ranging volatility mode, but I think that you're looking at near the end of the downward trend here, and we're going to get trapped in this volatility mode. Just really consolidating, trying to move into that June, July potential breakdown, which is right over here. the potential breakdown. And then from there, we will likely move into the breakaway phase, the invalidation phase, back up to the upside. So we'll see how it plays out. Right now, though, we're looking at an inverted pattern, a pop in counter trend mode. Given the fact that we're in bearish trending and we're in counter trend mode, I would expect this would be to the upside today. So I'm looking for a moderate upside move. This is daily. We'll come back over here, spread this out, and I would tell you that I would be looking potentially for, an open down near the 480, 490 area. We've already been to 480 overnight, so we hit my lower support channel down here, and I would think we would get a little pop. I would think we would move up, potentially up into the 500, 512 area on some sort of a relief move to the upside. Then we move into a bottom start rally in trending mode, a top resistance, flat down, and breakaway. So, the way I would look at it is we would be looking at some sort of a rally and then a consolidation over here, a top resistance in blue, and consolidation and consolidation. So again, not looking for the markets to go anywhere. Oh, that's the last breakaway. No, breakaway trend could be a little breakdown bar if we stay in the bearish trending. Not looking for a lot of activity here. Looking for potentially a little bounce up into that 519, 520 area, maybe. That's where I believe this upper resistance is going to be found, right up here in this 520 area. I've kind of already highlighted it right across here. Trending downward, I believe that's going to be our big resistance area, right in that 519, 520, 515, 520 area. And I think we're going to be looking at a pretty solid consolidation channel, running into this area here. So be aware that I think we move into this channel and consolidate. Okay, it's really going to be a very tight, go nowhere type of market in a fairly tight channel. Now, granted, we're looking at a 20, 25 point range, but that's pretty much where we're going to be. Now, the QQQ, same setup. Okay, so I don't have anything drawn on this. That's fine. I'll real quickly draw the excess phase peak. Here's the excess phase peak pattern. We broke down below the flag low. We reached this area and we're moving into the consolidation range. Consolidation range will likely target right over here until June, July, and then roll. So here we go with our downward consolidation channel. And there you go. That's the outline for where I think we're going to be. We're probably going to stay at this point below the 455, 456 area and really, try to trade within this kind of a channel and this type of a channel. So there's our range. You got yourself basically a 413 to 449, about a 30-point range, consolidating all the way out into this descending kind of a flag formation. Now, trying to move quickly. Gold and silver are moving in a inside breakaway pattern. Consolidation pattern today. Then inside breakaway, harami. Then a big crush pattern in trending mode. Then a gap potential in counter trending mode. Gold and silver have kind of started to form a little base. I'm not going to call it a big base yet. This is an hourly chart. I am looking for that base to set up. So I am looking for us to set up some sort of a base moving back up into this 3100, 3120, 3140 area before we start to move higher. Same thing over here with silver. I'm looking for this to really kind of move into a solid basing pattern. And a basing pattern would mean a move back up into the 32, 3250 area, consolidating and then rallying higher. So understand that I am looking for that move in metals to consolidate. Once we get into this kind of a breakdown phase here, where we've reached this sideways consolidation and the breakdown stalls, which I think is happening today, then we're going to move into a nice solid move for metals back to the upside. Lastly, we'll come over here. We'll take a look at Bitcoin, go back to daily. Bitcoin, if I remember right, broke down yesterday. Yep. Okay, so Bitcoin has really broken to the downside. I got to watch my time. We're down into the 74,000 area. Remember, not to be an I told you so, but I've been telling you it's going to move down into that 73.20 area. We got close to it. We're not done yet. Bitcoin will likely continue to channel in this area downward, kind of in this mode here, right here. We'll probably channel into that mode, trying to get down potentially into this 63 area. So understand that, we're really looking at a volatile type of a price trend, moving down below the 73,000 area and targeting the 63,000 area on this weakening trend. Was quite shocked to see that Bitcoin really didn't do anything while the markets were breaking down. What I think you're finding out now is your people are liquidating Bitcoin probably because of either margin calls or they just don't want to be around for this next pullback phase. So there you go, guys. Don't want to run out of time. Going to let you go right here. Get some. Just remember, we're going to be struggling to find a base over the next week or two, and we will likely recover up into this area, trying to find some support resistance channel for the consolidation phase playing out. Okay, guys. Oh, and remember, I told you so. I told you months ago this was going to happen, and it's playing out exactly as I expected. So good luck.